Hello, in this video we're going to see what happened with an account during a bear market. To have an example, and obviously this is a real account. This account, so that you have some perspective of the time period that we're considering, started trading in the 2nd of February 22. And the time frame that we're considering is until the 21st of January 23. That's 11 months, because that's when a dashboard was prepared. So we can see that the market went down during this time frame, big time. During 2022, the SP 500 went down approximately 20%. And the NASDAQ went down 33%. So let's bear this in mind, that SP went down and NASDAQ went down 19.4 and 33%. On average, the SP 500 since 1965 is growing on average approximately 10% a year, 9 point something a year. Okay, so that gives you also some perspective to how bad the year 2022 was for the market, if we can say bad, because we can always make money anyway. Let's go to the dashboard. We can notice that the total invested was exactly the same as the average invested, meaning that these clients put all the money in February, we started trading, and that was it. They didn't add money during this time frame. During these 11 years, they've added money afterwards, but that's irrelevant for the case now. The account value was 254,000, which means an increase of 27%. And that translates into 2.4%. And this is account value. That's if they closed all the positions and walked out of the market, they would have made 27% profit. What did we do with this money anyway? Well, what we did was, out of the 200,000, we managed to squeeze from the market 156,000, which is 14,000 per month on average, which is 7.1 on the total invested. And that's in a down market, as we saw. This account value, as it does all the time, includes the negative amounts corresponding to the option drag and the price drag. The price drag is the difference between what we paid for the shares and what they are trading at now. And the option drag is because we sold puts. Again, it's pulling the price down. Account value equals the price of the shares. So let's say the asset price, plus the cash that we might have, and the option drag, which is a negative term. So I'm going to put it between brackets. This is negative always. This is the account value. It has these three components there. Let's see how much we did with the 200,000. How far did they get, the 200,000? Well, with the 200,000 invested, we managed to buy 290,000 worth of shares, and we still had, at that moment, 36,000 of cash. So we invested 200, we still have 36. The difference between one and the other is 163. So with $163,000, obviously, we bought 290,000, yeah, rounding it up. With 163, we bought 290. So we bought 76% more than we could have if we hadn't managed to get all that money from put income and call income from the market. Yeah, effectively, we could say that 18% of the shares have been free, because we bought 53,000 for free. So with 200, we bought 200 we invested 200, but then we bought 290 worth of shares. Yeah. And even though if we put them in a curve, yeah, we bought 200, we still have some cash, the shares went down. When the shares go back up to the same price, if we hadn't done anything, they would be worth 200. But because we bought 290, they will go back up to 290 only when the shares go back to trading at the same price that we got them put to us or we bought them. All right, there is a graph like this in the book that you can look at. Those shares that we bought for 290, where will they be in the future if we don't do anything with them, just buy and hold? Well, they will be trading between 378 and over 500,000. That's just buying and holding, just buy and hold. And we can see it graphically here. These 280 that we have invested, this is the price now. They will trade between here and here, but let's remember that we still have 36,000 that we haven't invested, and of course they will grow as well, yeah, as and when we invest them in shares. The asset allocation, we can see that the assets are spread out quite evenly, and we have per share, per stock, well, these are all shares. Yeah, I think they are all shares. No, yeah, I don't think we have any ETF here. We can see just by looking quickly that most of the shares that we have, which is the reddish is, sorry, the blue is what we have invested. So apart from this one that we invested a bit more, yeah, we are somewhere between 5 and 10,000. So we are in this area approximately, yeah, which gives us a quick idea of the asset allocation per position. And this is a summary. Account value, the history of the account value, and this is the money invested. So when this, we can see here that there's a loss on paper because the last month of January has not been included here, and this is only showing ended months. But right now we were over 200,000, so we are here. Anyway, the account value, as we already know, is going to go up and down all the time, up and down all the time, up and down. We can't do anything with that, and it's going to be a broken line, quite a bit of a broken line. The option income, the green line here, represented by the green line, is smoother, and we can focus on making it grow and grow and grow. Okay, and also we may grow the number of assets that we have. This is the number of shares, independent of the price anyway, but it gives us a good idea of where we're standing. Yeah, so in after 2022, where the market went down, this is what we accomplish. I hope that you have enjoyed it. Again, we have all the trades here and the positions at the moment that this dashboard was prepared, they are all here as well. Thank you.